Hello and welcome to Pro Trader Strategies market commentary for Tuesday, January the 14th. All right, my name's Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media. What I'm here to do is not only talk about the economic data and how that's going to impact the overall markets, but how when we come up with our assumptions, we can then implement options into our portfolio to increase that yield. It's hard to just track the S&Ps and beat that kind of number, but when we throw in the options to the mix, that allows us to get a better return there. Anyway, without further ado, let's talk about the economic data. I did miss a couple of days, right, because I was on vacation for my birthday. So without further ado, I'll get on with talking about some of the economic data we did miss. Great Britain came up with manufacturing production yesterday. That was a negative 1.7%, expected to be a negative 0.3%, so worse than expected on that front. They did revise last month's number up slightly by 0.3%, but that is not going to make up for that headline miss, which was pretty staggering, to be quite honest. They did have construction output coming in much better than expected at 1.9%, expected to be 0.6%. But what we're really going to be concerned about really is that manufacturing production, because that's going to tell us a lot about the retail sector, and that does not look that good. Also, their GDP number came in much lower than expected at negative 0.3%, expected to be unchanged. They did revise last month's number up, but albeit slightly, only by 0.1%. Now, today, let's talk about here in the United States. We got the NFIB, which is the National Federation of Independent Businesses. It's a small business index. And that's the one I really like to look at because that gives you a gauge of how these smaller businesses are feeling about the overall economy. It's forward looking, so they do look at it. It's not a major headline number, but it is one that will show us that velocity of money aspect I so often talked about. And it came in at 102.7, expected to be 104.9. So it did come in lower than expected. It didn't miss on or revise the last month's number. It is a lower end of the spectrum from, since 2017, but it is above 100, which is good. We, after, until 2017, we didn't see this number really get above 100. So that is good. Then we also got CPI in line with expectations at 0.2%, and then the core CPI, which strips out food and energy, came in slightly lower at 0.1%, expected to be 0.2%, and we've got Fed governors speaking today as well. All right, so let's talk about the markets. We've got crude oil starting to make its way back up. It did manage to stay above that 200-day moving average, but it's right back down to that $58. Now, we talked about this before. We got up to that $58, $59 a barrel area, which lines up with our Fibonacci's here. The two lines in the sand here, that acted as resistance quite often on the way up. It's going to act as support now. You can see yesterday we did settle above that 58, or at least looks like we tried to, and settled just above it by a couple of pennies. Really, the number I think is 58, although we did still settle above 58.07, $58.07. Today, starting to rally up after testing that 200-day moving average. So we are kind of right back into the sweet spot, maybe slightly above where I expect the sweet spot to be. Mine's a little bit lower than that at like $55, $56 a barrel. But we are back into at least the realm of what we would expect this economy can kind of withstand, if you will. Up there in the higher 60s, that's going to put more of a drag on the economy right now because we're in that flux. So right now, kind of close to that sweet spot, albeit a little higher than what I would like to see. It is coming back off a little bit. Today, we've got the gold futures coming off by about $7 after blasting higher and testing that 1600 a troy ounce last week, really creating this whole paradigm shift in the volume and time spent at this area. You remember, I've been talking about it for quite some time. That 1500 mark was kind of where I thought that the market was going to start migrating back to after we broke below that and tested 14 50 earlier on, like a month or so ago. We've slowly started trudging up. Now, a lot of this spike has to do with some of the turmoil we've been seeing in the Middle East and with China. So that being said, we did get above that 9-day moving average, got the shorts on their heels. The gold bugs came out in strength and made that rally higher. Now, we're starting to get a little bit more tepid response with this, and that's causing gold to come off a little bit. And we're seeing the equities move to all-time highs. Now, people don't want to have their money in a safe haven when they feel like they could put it to work in more riskier assets like the equities. So I think that you've seen some of that happen in the last several days, as well as people have been putting their money back into equities. We've seen new all-time highs happening almost daily. It happened again today in the equities, but we'll talk about that once we get there. It was mostly an overnight thing. Bonds moving higher just by about 19 ticks. Again, I've talked about this. I think we can see the bonds migrate higher as equities migrate higher, because we would be in a thought process that lower rates would help businesses, help them allocate money elsewhere, allow them to borrow and ramp up production based on debt. So all of those things are what people will be looking at when they are watching the bonds. Now, we are still basically in a negative pattern here, where we are consistently seeing lower lows and lower highs, which is very consistent with a bearish trend. So we can see, like if we just drew the line there, we are still seeing lower highs and lower lows here across the board. If we called that a high, a low, and this is still yet lower than the last kind of push. But I do believe that between this 57.60 handle, that we will see the bonds start to kind of settle down and build up some of this volume and time spent in and around there. We've spent a lot of time there, not a lot of pricing action going on at this point, but that more time and volume will start building out that volume node there. All right, now we've got the VIX here. VIX is coming off again, but that's because, when we're seeing all-time highs, that is going to allow the VIX to come off. We got the Dow Jones up about 113 points, maybe 10 points off of the high. That can easily be made up in a matter of minutes. A lot of this having to do with Boeing's having a really good day, up about $4. It's been, that could be 30 points to the Dow on that. So keep that in mind as well, because we're seeing the NASDAQ struggle a little bit. Like I said, this 91.14 was printed overnight early. The new high is actually from yesterday. The real high is yesterday, with that close at or near the highs in the NASDAQ. That could have been a product of nothing happened over the weekend and light volumes happening. Here we go with the E-mini S&P, as I pulled this chart up before the other E chart, but you could see there that the night high was printed, and we have a bit of a topping pattern if we look at it from just or without taking out the overnight, I should say. You can see here, yesterday was the high. We are above this Fibonacci at this point, and we could still see, as the day goes on, another push to print those highs in the day session. But at this point, I think that it's still going to make the charts look a little bit toppy, and looking for tomorrow as a confirmation or a debunk of that pattern setup. So something we're going to have to really keep an eye on tomorrow. As you can see here, overnight inventory got long, but they flushed themselves out, and we've really kind of started slowing down on momentum and volume, really coming out of this rather quickly. But that being said, when we see that volume kind of come out, the market could, just migrate higher without a whole lot of resistance. So we're going to have to keep our eyes out for that. Now, I haven't done anything with my position. McDonald's is basically through my short calls. I'm going to be looking to have those called away from me, my long McDonald's get called away. We'll talk about more of that probably closer to Friday as that all culminates. And I'm holding on to Boeing. It looks like Boeing is really starting to find a bit more of a sweet spot right down here. A lot of buying comes in down here at this 125, 130 area. There's been a lot of support in there. Must be more institutional buyers coming in ahead of their earnings. I think their earnings are not going to look too good. But at this point, I have a winning trade on, and I don't think that I'm going to ride this into that earnings trade at this point. So I'm going to be looking to cover that trade as well. So McDonald's I'm going to let probably ride out, but Boeing is something I'm keeping a real diligent eye on. The 2 down days were the days I was on vacation, so maybe I need to go on vacation and cover from a mountaintop somewhere to get good pricing on that. Anyway, that's about all I got. This week we are doing a webinar on Thursday, so check that out at protraderstrategies.com. And other than that, if you can't take that, take it easy.